Welcome to Tradenet. My name is Meir Barak, and in these videos I'm going to teach you the basics of day trading. These lessons are hopefully going to provide you a reliable and consistent method to join this wonderful world of trading.
Just before we get started, if you would like to trade live with me, you are invited to click here and take my 14-day free trading room trial. Also, in order to practice or trade, you will need a trading account. If you would like to open a Colmex account, Colmex will pay for my trading room membership fee. Welcome to Lesson 6. Lesson 6 is about understanding support and resistance. When technical analysts talk about support and resistance, they are usually referring to lines of support and resistance. However, we will talk in our presentations about areas of support and resistance or levels of support and resistance. A support level is a price level which a stock has previously had difficulty falling below, meaning it found buyers. At this point, as a support level, buyer strength prevented the price from going lower. The more often stocks test the support line or retests the support line, the stronger the support line is, meaning more buyers came at the same point. Meaning the longer the support tests the support line, the stronger the support line is. Let's see an example. In this daily chart of ABT, we can see the support line. We can see that the stock tested the support line several times. Here, the first time, second time, third time. At the fourth time, it broke under. The price held above the support for a while. However, when it broke down hard. When a breakdown occurs, it would usually be stronger once the stock has retested the support line several times. You can also notice the higher volume at the breakdown point. There are several reasons for support. The first one is short sellers. Short sellers who sold the share at a higher price closing their positions. Imagine if you were a short seller and you would have seen the price dropping down to the support level. You are shorting the stock and you would like to take your profit, meaning buying. When you are a short seller, you're buying. Buying provides a support. The second reason is a share approaching a previously visited low will attract buyers looking for cheap entry point. So if a buyer is watching the stock consolidating, moving down, being supported at a certain area, he may expect the price to move higher, meaning buying at the level of support. The third reason are the disappointed short sellers. Those are the short sellers who are above their entry and are waiting for the share to return to their entry point in order to exit without a loss. Meaning, imagine if you were shorting the stock, it moved up, you didn't have a stop for some reason, and then it came down to the point where you should have moved out, meaning buying. At this point, when the price moves back to the support area, it gets close to the point where you should have exited originally. You didn't do it then, you'll do it now. If you do it now, you're buying. So you are in fact providing a support for the share price. So as we mentioned, there are a few reasons for support. The first one is short sellers who sold the share at higher price now closing their position. A share approaching a previously visited low will attract buyers looking for cheap entry point. And as we mentioned, the disappointed short sellers who are now above their entry and are waiting for the share to return to their entry point in order to exit without a loss. Let's talk about resistance levels. A resistance level is a price level which a stock has previously had difficulty rising above. At this point, seller strength prevents a price from going higher. The more often the stock tests a resistance line, the stronger the resistance line is. The longer the stock tests a resistance line, the stronger the resistance line is. Let's see an example. At this daily chart of X, we can see a resistance line. We can see that once the price moved over the resistance line, it broke out. Notice how the volume grows as the price breaks out. As you can see, the price was held down by a previously high. If you look closely, there are in fact more resistance lines in this chart. Each of them held for a while and then the price broke out. Let's discuss the reasons for resistance. The first one is those buyers who bought the share at a low price now closing their positions. So people who bought low are now selling high, therefore causing a resistance. The second reason is a share approaching a previously visited high will attract short sellers looking for technical entry point. So for the same reason, buyers are now closing winning positions, short sellers are shorting stocks in order to make a profit. The third reason are the disappointed buyers. These are the buyers who are now below their entry point and are waiting for the share to return to their entry point in order to exit without a loss. Just imagine if you bought the share at a higher price, what would you do if it gets back to your price? Would you sell? Would you hold? Well, most people will sell. So the reason for resistance are those buyers who bought at a lower price who are now closing their position at a profit. Short sellers who are now trying to make a profit from what they think right now is a high price. And those disappointed buyers who are still below their entry point and waiting for the price to return to their entry point and exit without a loss. Thank you for watching my video, and again, if you want to start trading, I highly recommend that you join our live trading room and trade live with me. It is a free trial of 14 days. And if you don't already have a trading account and you want to open a Colmex account, well, Colmex will pay for my trading room. Again, thank you for watching and see you in the next lesson.